Hello and welcome to the June Smart Trading Monthly newsletter. The markets have mostly consolidated over the last month and are trading at key resistance levels, so it will be interesting to watch to see if we get a break to new highs in both the Aussie and the US markets. So let's check out some charts, but before we do, I just need to remind you that I'm not licensed to provide any personal investment advice. This video and all the charts and trades I share are for illustrative purposes only, and I'm just showing you how I view the current market and sharing this with you. So let's head on over to the markets and see what's happening. On the chart here, this is Metastock 16. I have upgraded to Metastock 16 from version 15. There's not a lot of difference. Only difference is the way the scan works and the report comes up. Other than that, there's very little difference. So there's no need to rush out there to upgrade from version 15 to 16, unless of course you want to upgrade. So this is the ASX 200. So this is a weekly chart, and as you can see, it's still in a nice uptrend here. Uptrending channel. Has had a pullback to the bottom of its channel line and risen up. This line here is the 6,000 level that it's had difficulty breaking in the past, but we've managed to push through, and we managed to push through it again. But we are making equal highs here right now. So if we go to the daily chart, you can see that was the last high it's made, managed to make an equal high, got back down to the 6,000, sort of moved above and below it, and now it's moved up again. So we are looking for a new high to be made above these equal highs here for that uptrend to continue. Of course, I don't know what's going to happen, and it's all about following my trading rules and all my trades. So that's the chart of the ASX 200. Let's have a look at the S&P 500. Here's a weekly chart of the S&P 500, and you can see how the US market has also stalled. Still in a healthy trend, but getting some support here at the 2550 and resistance here at the 2800. And if we go to the daily chart, you can see how it's been churning around in that area. It made a really big swing up to new highs and needed to take a pause in there, which it did. It dramatically had a drop, and now it's pausing in there. And pausing's good. I mean, when the markets swing very strongly, they need to catch their breath if they're going to take off again. But we don't know how long it's going to take them to catch their breath. It could take some time, and it could continue to go sideways for a while. But while the market's healthy, it's still got a rising moving average line, and it's still got an uptrend in play. So that's still healthy. And it may move around between this area of these highs here and the uptrend and support line for quite some time, or we could see a breakout very soon. So let's head on over and check out some of the trades that I have shared with you in my last newsletter video update. As you know, I trade two systems. I've got my long-term weekly system, and that system trades the ASX as well as the US market. And that's the one where I'm looking for shares that are nice and healthy, and I want to hold on to them for as long as they're going to stay healthy for. And that could be anywhere from a few months to a few years. And I will continue to build on those healthy shares. I'll cut any that aren't healthy and get rid of them, and stay with the healthy ones and continue to build with them. Then I have my medium-term daily swing trading system that trades both long and short in direction. And that one I trade with CFDs. And that can hold trades from a few days to a few weeks. So it has an average hold time of about 30 days. And I teach all my trading strategies in my Ultimate Smart Trading Mentor course. That course is all about getting inside my head and teaching you all about my trading systems, my trading plan, my trading routine, and everything I do in the market. And then I keep you updated through a mastermind program that I have available for all mentor clients. And that's a program where I share all of my trades with you. We have half-an-hour video updates regularly. We have a discussion forum, and we also have a couple of webinars throughout the year. So let's go back to Metastock and have a look at some of the charts I previously shared with you. So I just close the S&P 500 down. Okay, here's a weekly chart that I entered into on the 27th of February. It was one that came up in my weekly scan when I run my scan. When I talk about my scan, that's the Explorer function of Metastock, and I run a scan on the weekends looking for shares that are healthy. And this share, where that little arrows are, had started to become healthy here, and once it moved beyond $1, I got another signal of its health, and I entered into it the following week. And that trade is still open and running and doing very nicely, and my stop loss is now beyond break even and in profit, and I've also received a dividend on that one. So that share is moving along very well. The next weekly trade that I've shared with you previously is this one. I'd entered into it back on the 14th of June. It moved very nicely. I bought some more. It moved very nicely, and my position on my two trades had more than doubled, so I sold half. And I've basically pulled out my original equity, and I'm leaving my profits now to run in that trade with my trailing stop loss. And I've also received a couple of dividends along the way as well. And I won't exit these trades until my stop loss is hit, and that stop loss will regularly move as those trades continue my way. Now, with my weekly trades, these are both Australian shares. I also have been building into a portfolio of US shares in my weekly long-term system that I've been sharing with my mastermind members. So this is one of those US shares I entered into on the 29th of May at $353.39. And you might think, wow, that's a high price. But to give you some perspective on the US markets, the S&P 500 is the core index, which is like our ASX 300. So in the Aussie ASX 300, 86% of that market have shares under $20. In the US S&P 500, only 4% of shares are under $20. Now, under $50 in the US market, 25% of the S&P 500 is under $50. The Australian market, 96% of the ASX 300 is under $50. So Australia is a very low price market in regards to price points to the US. So it's not, it's common to see US shares a couple of $100, even over $1,000. So don't be put off by price. If a share is going to rise 10%, it doesn't matter if it's a $10 share or a $300 share. It's going to be the same profit on that trade if it rises. You're going to buy the same dollar amount, might be a different quantity, but if it rises 10%, it's the same profit. So this is one that I bought into. It's been healthy for quite some time, and then it took a pause of that trend. And if you go to the daily chart, you can see how that trend paused in here, and it built up some support here at 270 and some resistance at 340. So when it broke through 340, that was when I entered into it. It was making new highs. That uptrend was continuing. So the signals was there, and my trading system also gave me signals, and that share has moved nicely higher, and so has my stop loss. So this is a weekly trade, so I use a weekly stop loss on this one. And it's heading up near $400 now, so it could break into the next $100 level. Now, there are some weekly trades that are open and running in the market, and I also shared previously a daily system trade. Here's a daily system trade that I shared previously on Mineral Resources. The share had been falling, started to become healthy, broke up above its downtrend line and also a resistance line. Beautiful move, moved higher the next day beyond $20, and unfortunately it then completely collapsed and hit my stop. Tried to recover and has since fallen lower again. So could have been a lot worse if I didn't exit on my stop. So my goal with trading is to get into trades. The ones that do well I stay with, the ones that don't I exit. In the process I'll have some small profits, I'll have some small losses. But as long as my losses don't go beyond a 1R loss. 1R is my risk amount, and I don't want it to go beyond a 1R. And I can get into a trade, it can move up a little bit and my stop moves up. So then if the stop's hit, I'll take part of my risk size on that trade. So this trade I held for 23 days. and if this was a share trade it would have been a negative 8.44% loss. It was a CFD trade with a 10% margin, so it was a negative 8.65% on the margin amount. And this is the figure that I'm most interested in. I'm going to get some small losses and some small profits, but I want to make sure that no losing trade goes beyond a -1, and I'm looking to get some winning trades that are multiples of R, so because that's my risk size. But in between I'm going to take some small profits, some losses, and I will take identical trades. I'm going to show you an example of the same setup in two other shares, and they've had different outcomes. So I've entered into this one and it's a losing trade. I also entered into, I'll just close this one down. I also entered into this one. Very similar signals, with this share had been falling, had gotten above a support, gotten above a downtrend line, came up in my daily system scan, met my trading rules, entered into it, and this one did very nicely, and then its stop loss was hit. And these are daily swing trades, so they don't have as long a hold time. So that one was a 0.67 R multiple win. So this one is just a small win, the other one was a small loss. And held that for 54 days. It was an 8.83% on the total trade size if it was a share trade, and 87.28% on the CFD margin. So I will have some small profits, I'll have some small losses, and then it's about getting those big wins on board in between. I'll break even on some, and the big winners will make up for everything else. The only thing is, I don't know up front which one the big winners are. So that trade's also closed. And here's a trade with a very similar entry that I've opened, and this one's still running. So the share had been falling, broke up, came up in my daily system scan that day, met my trading plan rules, moved nicely higher, didn't do a whole lot but never hit my stop loss, and has since taken off. And my stop loss is nicely in profit right now. So 3 trades, all with very similar entries, all with different outcomes. And that's what trading's all about. You're going to have a different outcome. The most important part of your trading is your money management, and I can't stress that enough. You need to have key money management rules from the start of the trade, before you even buy into the trade, to knowing what to do once you're in the trade, and having a range of exit strategies along the way. You can't control the market. All you can do is have a good trading plan with clear rules that is all about keeping your losses small and maximizing on your profitable trades. And that's what my trading systems are all about. And I spend a lot of time on money management in my Ultimate Smart Trading Mentor course. Now, as I mentioned, Metastock 16 has been released. So I have Metastock 16 on my computer. The main difference between 15 and 16 is the way the scan works. If we go to the Explorer, and all I do is tick my scans. For the US market, as mentioned, I trade the US and the Aussie market. All I have to do is change the ASX 300 to the S&P 500. Oops, wrong one. To the S&P 500, and when I do that and press Explore, the Explorer function will run. I've got 2 scans picked here, so it's running on the S&P 500. So the daily long system right now has 22 shares out of the top 500 stocks of the US market for me to look at on the long side. On the short side there was only 8. So you can certainly see there's more strength on the upside of the market, so I'll be more focused on that side of the market. And with Metastock 16, this is the main difference. The report now comes up giving you how many shares in the results and the rejections. The previous version of Metastock didn't do that. And you can run multiple scans and click between the reports, which you couldn't do before. Other than that, there is no other change between 15 and 16. So that's the main changes between the 2 versions. If you are using 15, you may not want to upgrade. There is no big difference there. It's personal choice. Now, if you don't have a trading plan, my book Smart Trading Plans is available. It's a step-by-step guide to helping you develop a trading plan, and it comes with free book bonuses. So when you purchase a book, you go to my website, enter your name and email, and you'll get a Word document with a trading plan template that you can complete as you work through the book. And it gives you some ideas, but it's all about developing your own personal trading plan. Well, my Ultimate Smart Trading Mentor course is about me teaching you my personal trading plan. This book is for people that want to write their own trading plan with their own strategies. And you can buy that from my website, or it's also available in Kindle version from Amazon, and many other bookshops sell it online as well. And if you haven't been to my website before, check out www.smarttrading.com.au. Make sure you enter your name and email in the free special report box, and you'll get my top 10 mistakes that new traders make. Plus you'll go into my database and you'll get my monthly video updates. I only send an email once a month, sometimes once every 2 months, so I don't bombard your inbox with junk mail regularly. I don't like that. I mean, I get a lot of emails myself, and then you just end up unsubscribing. So that's a wrap for this update. If you have any questions, feel free to contact me. My contact details are in the Contact Us area on my website. Goodbye for now.